Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday UTC. Big shout out to everybody that's joining the stream live today. See, we've got a number of you already here, and for everybody that's watching this on recording. So, happy Wednesday, everyone. So, it's going to be chart request day today, as we know. So, if we've got any bits and pieces to look over, do let us know in the chat and we can take a look. We'll try and get through as many of them as we can. I thought I'd just start us off at the moment to ease us in here with Bitcoin. All right, so we can see here that we've got our key levels. These are defined and refined from a weekly basis and down. Okay, so for anybody that's wondering, I know I got a few questions about this last week, how I kind of take the levels. I'm looking all the time at what's capping the market, right? Guys, do let me know if there's any issues, obviously, as well with the sound or with the visuals. Okay, so as we can see here, these really clean lines actually just come from a high time frame chart. And when I say what's capping the market, what do I mean by that? So it's a term that I've taken from SZ. He is probably my biggest influence as a trader before real traditional market traders that I studied under as well. But I like the term. Cheers, Tino. Good, awesome, buddy. Good to see you. I like the term because it really speaks to me, because I'm thinking if you could put in a cap on the market, where's it being stopped? Yeah, because you could take this high, you could take this high, you could even take this high if you want, right? But for me, when we're looking at this high here is key, because why? Resistance, 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 right? But also, look, deviation, sell off, deviation, sell off, main deviation here, really big sell off, loses this level and just continues down. All right. So that's how I'm looking at it. Burn, Nipar. Hey guys, how we doing today? Hope everybody is well. We've got a bit of a grim day going on in here in London. Got some building works going on just outside the office. So hopefully it doesn't disturb anyone, but do let me know if it does. So that's it. Why this level? Look, key support. Look at this wick. Look what happened when price interacted with this level. So much got bought up, but it couldn't hold it. It continued down. We lost the level, retested it here, and sold off aggressively. That's what I'm looking for with levels, right? The same as we've got with our green level here. When we're looking at this and we're saying, okay, well, look, resistance, resistance with deviation, big sell off, right? Close above, retest, sells up to take out liquidity. When it breaks down, closes below, retests it, sells off, right? Comes back again, can't get above, deviation, big sell off down to liquidity of the lows. All right. Then when price steps back in this range here, we can see that this was a deviation. And then we target the far side of the range, right? So for me, we would put in a midline here as well, which if you did it between these levels without this getting too clustered, right? Let me just draw this back to here. Right, I'm just going to draw this in. And we can see how significant this has been as well. Let's just make this nice and thick. So this midline, right? Look, resistance, resistance, resistance. Closes above, retests it, sells up to the range higher. Now remember, when we're trading ranges, guys, we're looking to trade these ranges from extremity to extremity via the EQ or the midline. Yeah, and let me just make that a dashed line as well so it stands out a bit more. So this is our major range that we're playing here, right? Now, the reason that I'm not as bullish as a lot of people at the moment is because we're here, and I know this looks a bit messy, guys, but I thought I'd leave it on there for you because this is my live trading chart, right? So you can see what my thoughts are in real time. Love doing the kind of naked charts and then building them all up, but I just thought it might, someone might get value in seeing kind of how I'm seeing it on the lower time frames as well. So this is our larger range. This is a key level for me as well, right? Because look, resistance, resistance, as we just discussed, right? We can see the interaction. Also, look what happened here. And I'm talking about the thinner green line here, guys, right? Close above, retest, hold this area, and for confluence, this high as well, which we're going to take a look at now as we drop down to a daily, right? So I had a lot of people say, why this high? Because it just gave me a bit of extra confluence, right? We've got this level here that we can see deviation, big sell-off. We're not going to go into it too much, but look how well respected it's been here, here, here. Again, deviation, big pump. So this thicker green line here was a key level for me because I wanted to see this hold. when we came up and we hit this level here, literally to the dollar, and we came back down, we had this inefficiency here, this fair value gap, right? So my theory was this: if we're going to come back down to find support, we want a key area that we're going to find support, and then we want to be aware that it's this inefficiency here, this fair value gap on the daily, that's drawing price down to rebalance. Yeah. Now, when we see price come back down here, I'm looking for a key area that it can hold. You can use Fibonacci's, right? So you want to anchor it to base of the move here, right? And bearing in mind that this point was up to here. Okay, and we can see here we're getting interaction around the golden pocket. Nice little bit of confluence there, right? But for me, not quite enough. CS Lychee, hey bud, good to have you on again. But this isn't enough for me. But what it does do is it says to me, okay, this is our golden pocket, right? So we want to see price hold here. It's also got beautiful confluence with this green line. Why this green line? Because when price came to here, we found rejection, resistance, 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 resistance. Big punch through it, right? These big impulse moves leaving these inefficiencies, right? We see them, we expect that inefficiency to be rebalanced at some point. So naturally, if this was a resistance in this area that held price for sort of like 5-6 days, then we want to see the people that were selling here supporting it as buyers. Yeah. And that's what we can see here. We get no daily closes below. We get this level. We take beautiful liquidity sweep on it. We get this bullish engulfing candle here. All right. Inefficiency to fill here that's drawing price up. And then we know where our liquidity is resting because it's resting above this high. Yeah. Because that's the key point, the swing high before price sold off. All right. So that's how I'm looking at that. And I'm going to fly through these a bit quicker today, guys, because I want to take some of your chart requests if you've got any. If not, we're just going to take a look at some different assets. All right. So something else I wanted to cover with you guys as well was just candle patterns and just candles in general. Right. Now, we're looking at key levels. Right. Now, I'm just dropping this down to 1 hour because I like 1 hour, 4 hour candles, I think can tell us quite a lot when we're looking for, swing trades or day trades, those kind of trades that are going to develop. Either we're being open and closed in the same day or they have a shorter period, maybe a couple of days. So price is coming into this key level here, right? We've got the green line. We said, look, we want to see this hold as support now. It was key resistance before. We want to see this hold as support. So we look for the deviation below. We sweep. Price comes up. All this move in here gives you opportunities to trade on the lower time frame. Yeah. But one of the things that we're looking for are what the candles tell us. So I look for the two key candles I'm looking for are engulfing candles or pin bars. Now, these tend to be, and Pedma7 has just done a magnificent thread on Twitter about this on engulfing candles, which was so interesting. 1 second while I pour my Twinings breakfast. No, it's not actually. It's back to the Yorkshire tea today, Craig. So it's no off the Twinings, I'm afraid. Right. So before I digress, check out Pedma7's article on it on Thread. Yeah, that's Pedro. It's PEDMA7 on Twitter. And what he's done is back-tested data for a long period of time across different assets and focus with a high focus on crypto to look at how effective bullish and bearish engulfing candles are. And it's a brilliant piece. But basically, the long and short of it is like most things, they're most effective for us when we're trading with the trend. Yeah. So if we're taking a look here, for example, we come up, set a high, low, high, we break this, we get kind of like our market structure shift in here. Hang on, let me just zoom in a bit for you guys. And let's just start from the beginning here. So look, we're in a downtrend, right? Big drop here, lower low, lower high. Bearish engulfing, price sells off. Yeah? Bearish engulfing, price sells off. Bearish engulfing, price sells off. No bearish engulfing here, right? Price does sell off, finds support at the key level. So we wouldn't want to be trading a bearish engulfing here into this anyway, because we assume that this could act as support. Sorin, afternoon, buddy. And then here, we're just waiting for our structure to shift. Yeah, and we're saying, okay, we come up here, set the interim high here. The price is kind of grinding up here, really. Yeah. We want to see price coming up, setting a low, then we break the high. Now, we can trade these engulfing candles. Yeah, of course we can. And the same as the pin bar candles, these ones. The reason that we wouldn't take this on here is because by the time we've broken structure, we're coming into what we expect to be a key resistance. All right. Kelly, yes, sorry, I should really just. Hedma7. That's the guy you want to follow. Unbelievable algorithmic trader, part of our team over at the Bird Nest. Builds algorithmic trading systems like the MBS system that's just been killing it all year. And actually, if anyone's interested in this or aren't already a part of it, the deal we've got with Bybit now means that if you sign up through the Bybit referral link, you can get access to all of the calls for free now at TBN. Just to kind of, it's a deal we've done with them to just try and help people kind of get back on their feet a little bit. Obviously, it was a paid service previously as well, but this guy, you get the calls from his MBS system as well, and he's an algorithmic trader. Kelly, you're very welcome, mate. But yeah, algorithmic trader, fantastic guy, one of the smartest guys I've known, but unbelievable coder as well. So he codes all of these systems for back testing, and he does them to a point of, if you look into stuff like this, and I'm not a systems trader, but you always want your back testing to be robust. And this guy is just, yeah, I love learning from him. But basically, he's the one that did this test. So go back and read it because I find it really, really fascinating. And the idea is that when we're looking at these candle patterns, we're looking for them to typically be trending, which is when they're most potent. Yeah. So even if we're looking at this uptrend here, see these pin bar candles? They look like a hammer. Yeah. You see them like quite a few examples of them here, here, here. This one, although it's a little bit more of a doji, but again, here's another one, right? They're showing you the long downside wicks, yeah? Is just drawing the price up. So the buyers are stepping in there, right? Price is trying to get down here. It's getting bought up. Leanne, hey, bud. Good morning indeed. It is afternoon, you're right, but we'll let you off. You're within 15 minutes of it. So it's, for me, I'll give you an hour's leeway, to be honest. An hour's leeway, but it's great to have you on the stream again. And Kelly, 1:14 a.m. there in New Zealand. You absolute soldier. I love that. Probably the country I'm most excited about visiting. I've been very fortunate to travel, but I've never got out to New Zealand. So that's on the agenda for a few years' time. I think might need to get myself out there for a few months. A guy that's become a very good friend of mine, who is also one of my private mentoring students, is a good New Zealand lad as well. So we have good banter. Actually, we had our session just before the live stream, which is interesting because for me it's early morning and for him it is late evening. But thank you very much for tuning in from all the way over there, especially at this time. So I'll try and keep this less waffly than normal so you don't end up going to bed at silly o'clock, all right? But the reason I'm talking about this on an hourly is because I advise anyone when you're looking at these interactions, right, to just be looking at what the candles are doing. So you see we get this here. We get this quite sharp jab into this level. Yeah. Price then kind of meanders away. See these candles? They're kind of a bit meh, for want of lack of a technical term. There's no impulse in them, is there? There's no kind of punch higher. You get this move here, but we're going straight into resistance. Yeah. And we can see we get our deviation, close below, retest, and price sells off. Now, when we look at this interaction with the level compared to this one here, see how we're getting these stabby wicks driving into the low, right? This is what you would call, in for one term, absorption, right? Price is trying to get down here, but it's just all being absorbed by buyers. And this is significant because my theory or the reason that how I trade is I'm looking for liquidity. And I believe there's liquidity below here. Let me just get rid of this now. Right, that there's liquidity below here. And that liquidity is being generated in order to fill sizable orders on the opposite side. Yeah. So if price is getting driven down here, this is just encouraging people to go short. Yeah. Now, if I want to go long here and I've got a huge amount of money to place then I want to drive price into here and I want everybody to be going short. Yeah. So I'm driving price down. And what's happening? I'm convincing breakout traders below this low, yeah, to execute, to enter positions. I'm triggering stop limit orders, yeah, for people that are looking for that breakdown. Then I'm also taking out liquidity from here, which are people's stop losses from when people were long from here, yeah. So what does that do? That generates tons of sell orders, means that I can then fill those, yeah, with my buy orders, and then we look for price to reverse. Now, when that happens, Look at the difference in the price action here, where it's a little bit choppy, not really doing too much, versus here, when it dips in, it has this absorption. How punchy this is. Punchy, bullish engulfing. Punchy candle there, another bullish. Then another bullish engulfing candle here. And then this move here as well is really telling us that price is getting ready to move higher. All right. So just something I'd always advise to people is when you're looking for things that fit the bias, then just take a look at it and, make sure that the candles are telling you what you want them to tell you, right? When they're at this kind of level. If you see price action like this moving away from a level, doesn't really tell you that the buyers have stepped in, right? Price is kind of meandering higher. What I would do here, by the way, guys, if I was uncertain, is obviously we've got our key level here that we're looking at. We see this move above, yeah? I'd be marking that move above there. If price had dipped back down here, and we'd found some kind of support, I'd be looking for something like that to go long, yeah? With that kind of being the trigger there. All right, does that make sense? So we've punched out here, but I'm not convinced by the move up. Doesn't give me that kind of energy I'm looking for. But if we did hold here, price dipped lower to generate liquidity below here, and we hold this level, showing we've flipped it, then a break of this higher, an impulse move higher, and a retest is what would then have me looking for long trades there. If not, my assumption is that the price is now still searching for liquidity lower. It hasn't finished sweeping. Yeah. And then we look for the move higher. Okay. So I hope that makes sense in terms of just the levels that we're looking at. I don't like too many levels on the charts. The reason that I've got this one on here, which I'll share with you quickly, is because I found this quite interesting. Kelly, what have we got? A night owl. Awesome. Usually start for the US Open, which is 2:30 a.m. my time. Nice. So is that the golf or the tennis? Usually 1 a.m. Oh, daylight savings at the moment. Do you know what? I feel terrible moaning about this because obviously we're London, so we're either UTC or UTC +1, right? But when it switches to +1, good God, does it throw me off. By the time I've got it right, yeah, then basically it changes again. But before I digress, US session. Oh, I thought you were talking about the sport. Sorry. Yes. Oh, Jesus. So you're staying up for the US Open, that 2:30. God, that is hardcore in terms of looking to trade that forward. Absolutely fair play to you. So I don't know if you've been on the stream before, but I love trading that session. My main tradable session is New York AM and then peak session as well. Absolutely brilliant times to trade. So bear with me 1 second because I just spilled some tea on myself. Getting all excited then. Right, so before I digress too much, the reason that I've got these blue lines on here is because I found this inside bar really interesting, right? So when price got above this red level, which is our key high time frame level, we want to see price find support, which we found here. And then we want to find a clear objective, right? So for me, this is liquidity resting below the lows, yeah? And then this is liquidity resting above the highs. So we want to see these swept. Now, obviously, at this point, we don't have that data, right? We're going to chop that data off. We've got the high and we've got the low, but our key high and low here for me is this inside bar. Now, the inside bar pattern is when we get a large candle like this, or any candle, that then the second candle closes within its range, meaning the high of the second candle cannot violate the high of the prior candle and the low cannot violate the low. When this happens, we create ourselves two ranges, all right? So we've got the inside bar. So we're going to make this, what color is that? I think that's like a dark purple, is it we've chosen over there? Something like that. We'll pop it in that color anyway. But this makes our inside bar. And we obviously know what makes our mother bar, which is this candle. So this becomes our range, right? Now, we have this range from the very moment that this candle closes, yeah? So when this candle comes down, closes here, opens here, our theory is the same as it is with any range, that when we run the low, we come back inside, we expect price to travel to the far side of the range via the EQ, right? So, So let's just draw that in. So this becomes our first range, right? Because this is a range inside a larger range. Yeah. So what we want to see is a move like this move coming out of the range to tell us that price is now moving to our secondary range target. All right. So let's just make this nice and simple and clear for you guys so you can see what I'm doing. All I'm looking to do here is add an equilibrium. So any range, I always add an EQ because these are very, very often respected, okay? So we're going to take a look at this, obviously, when we drop onto the lower time frames. But look, range lows swept, back in, midline, range high. Range high swept, we fail to close above, comes back in, midline, range low. Range low gets swept, mid to high. Then, when we deviate from the high, but we fail to sweep the low, we then get this expansive candle here, right? That takes the high of the mother bar, but closes back within. So we then draw our fib from here to here, yeah? And that's what gives us this midline that's on here, right? Which at the moment is just drawn in with a fib. Oh, bear with me. I keep doing this lately for some reason. Right, so let me just draw this in across our range. So this dotted line, right, is now, let's make that too thick so it stands out a bit more. That's now our mother bar range EQ, all right? So everything from this candle. So once we've exhausted the inside bar, as we can see here, we had that strong close above, we can now move away from that and our attention focuses to the mother bar. So, same principle, right? And guys, let me know if I'm going too fast or you're not following along here, all right? But range principles, deviation, closes back within, we trade first of all to the EQ, price retests the EQ, we trade to the range low. Range low, back in the range, EQ, range high, yeah? This one was a little bit of a sneaky one, all right? Because we deviated, we sold off down to here, we didn't quite get to the EQ, price ran up here to take out the liquidity above these highs, right? Fine, we're never going to be right all the time. But what we can absolutely say is then when it closes back in, is we've got even more conviction then that price is going to the far side of the range. Gets to the EQ, holds at the EQ, closes below, sells off down to the range low. All right, guys? Sebster, awesome name. I've got a very good friend called Seba. I always mispronounce his name, and he's an absolute legend from Belgium. Let's have a look. Thank you. Best explanation of liquidity and what market makers are doing. I've been so confused by that. Oh, awesome, man. Very kind of you for saying. Thank you very much. I like keeping things simple. I think there are very complex reasons for these things, but I think if we just try and think of it in the simplest terms, it helps us just kind of follow along to a higher time frame bias, all right, and narrative. Craig Parker's in there with Rune. I have a big short open from last night. Well, big for me. Tanner, nothing wrong with that, mate. I've taken profits already, a couple of quid with a stop now in profit. That's fantastic. So do you want us to take a look at that? Yeah? Sebster, awesome. Only been trading 3 months. Fantastic, man. What I would always recommend to everybody is really ask yourself what type of trader you want to be, whether it's something you're looking at a full-time pursuit, whether you're looking for this to be, something to hopefully make a bit of money on the side, or whether it's just something that really interests you. Really get a handle on what type of time frame you're going to be able to trade upon, right? Now, price is fractal, meaning you can put different techniques and methodologies across loads of different time frames. But a mistake I see a lot of people make early in their trading careers is that they see like scalpers and these amazing low time frame traders like SZ and people like that, and they want to learn that, but unfortunately, but they've got careers, they've got families, right? They've got other commitments, so they can't spend the time to do that. When you do that, it's more about swing trading. Fantastic, exactly. So you've already got a good handle on that, which is a fantastic start. From there, find good reputable people with a track record that you are going to pay attention to and kind of stick a little bit in that narrow focus. Have a broader range of subjects that you want to learn, but try and avoid a lot of the noise on Twitter, bits and pieces like that. Find a good collective of people to learn from, become part of a really good community. We've got amazing educational resources, facilities, professional trading team, and a great community over at the Bird Nest. That's something that's interesting you. Whack onto the free trial, come and try it out before you commit to anything. And if it's not for you, spend your time finding the right community, right? That's what I would say. It will be absolutely huge for your development, for your support, and qualified trading advice. It is, mate. It is difficult to keep out the noise, even even when you've been doing this for a long, long time. But I'm sure you'll do really well. If you've got any questions, you can always reach out to me on Twitter or something, or if you take the free trial at the Nest, I'm on there every day. So don't hesitate, but find good people, engage with those people, and then just try and keep the rest of them out and just really focus on your development. All right. So basically, these are my thoughts on Bitcoin at the moment, right? We're back in this range. Yeah, and let me just show you on a 15-minute, for example, how this would look. I trade these on a 5-minute, guys, but I appreciate a lot of people don't kind of have those time frames or the ability to play those kind of time frames. Now, obviously, we would look to play this initial inside bar range. Yeah, remember, this is our inside bar from the mother bar. But look how clean we get this, guys, yeah? Rejection at the midline, sells off to the lows, come back up, deviates, but we're still in this because our stop would be below this low, up to the mid, hold the mid, up to the high down to the low, retest this, right? But look how we're not getting this breakdown. Nice punch above, retest up to range high, all right? This is the point here where we violate that, yeah? We come up, then we take out the range high here for our mother bar, high to mid, retest mid, mid to low, all right? It just gives us a good understanding of levels and then a good understanding of how we can kind of interact with that as well. So hopefully this is something that I know a lot of people struggle with levels, and I find using inside bars is a really, really good way to get those ranges out. Awesome, guys. Thanks, guys. See Ron, everyone. Really kind of you to say. Look, I went through a long, difficult journey myself to do this professionally, and I was helped by a lot of really, really good people, and that's our ethos at the Nest. We just want to try and kind of give back a little bit, because I think everybody that gets this position has help from some pretty amazing people in the space. And once you get that community, you stand a much, much better chance of making it in a very difficult industry. So that's the Twitter handle, guys, if anybody's interesting. Interesting point of view there on TA, my friend. Probably not going to be the stream for you, mate. I'm sad to say, if you're not a great believer in technical analysis. But there's many different ways to trade, right? You fundamental analysis, you've got technical, you get system builders, people like that. So not to discredit anyone, everybody finds their way in this, and absolutely all the best to everybody that does. So just wanted to show you that, because I think we're kind of still holding this range at the moment. So for me, I'm now looking at this range low and saying, well, if this is where liquidity sat at the lows, yeah, and this is where it is at the highs, then at the moment we're kind of just in a little bit of no man's land, right? So here we go above, we swing below, and we go up. Nipar did a session on Dank's channel the other day. Another real, oh man, yeah. Dank's unbelievable. Great guy, great energy. Hooking up in London for the blockchain event as well next week, which will be really cool. B, I've never seen anyone do TA on YouTube who then shows their P&L. I think it's just I don't really see lots of people that show their P&L, to be honest. I think, first of all, it sets the wrong example for people. People get into trading because they think it's all about money. A lot of traders make their money over a long period of time, mate. It's not like people say on there, these 1000x altcoin gains. Fine, I'm sure there's people pulling those things off. But professional traders, when you work in the trading floors, London, New York, Chicago, wherever, and then when you go on and you learn it and you bring it on, and people that are doing it, YouTube, stuff like that. I mean, SZ, probably one of the best traders I've ever come across. Does he really need to show his P&L to people? Like, what business is it of people? It either works or it doesn't, right? You don't need to see if people are trading millions. Just because someone might have a $200 account, does that mean that they're any less, that they've got less ability than someone that has more money? No, because you don't understand, or necessarily know their kind of positions. I don't see a lot of people sharing their P&Ls, and I don't blame them. I really don't. For me, it all becomes a bit of a dick measuring competition out there in terms of wealth, and it sets a bad example. Money and wealth are a byproduct of a successful trading system. So the effort and the time should go into successfully understanding your discipline. And off the back of that, the money will come. I don't recommend anybody goes in with large amounts or anything. Just like any form of gambling, what you're doing is here, you're taking a risk in a risky industry. So make sure you're just doing it with a controlled amount of money. All right, guys. So are you a blockchain event in London? I will be there. Sebster, awesome. And I will absolutely be there. Yeah, I'm going to be there. Burb is speaking as well. So he's doing one of the keynotes. fantastic. Anybody that's there, do let me know. Come and hit me up on Twitter when you're there and around, and we'll arrange a place to go and meet up. So, before I digress anymore, I believe, Craig, you want us to take a look at... Let's have a look. Was it Rune, wasn't it? Yeah, I believe it was Rune. If anyone else has any charts, guys, let me know. Okay, Crypto Sebster. Perfect. I will notice you there, mate. I'll take a look when we're off the live stream and look out for the follows. So let's take a look at what we've got on here. Let's go and find Rune. Where are we? Here we are. Right, this was very, very interesting recently, I imagine, because it's got a nice little blue tick on there. So, tickets still available, Nick? Yes, yeah, I believe they are. And then, Anik, hey, bud, can you take a look at Flow? Yeah, sure. Let's take a look at Rune and Flow. Vicos77, thank you, brother. Really appreciate that. Yeah, just that's my thoughts on it. I don't mind. I'm not someone that goes around. I don't troll people. I don't get involved in any shit posting and stuff like a lot. And I don't mind people that do. But just for me, there's a lot of different ways you can trade, right? Anybody that tells you there's just one way to trade, you've got to do this, you've got to do that. I'd show just a little bit of caution. I've seen people with unbelievable successful trading systems. Look at Burb, took 2 big swing hits, lost like 50k or whatever in the 2 trades, and then sticks to his system. He's got a 30-something% win rate, which people slate all the time without an understanding. He made $202,000 on that trade the other day, right? And that is someone showing their P&L. That's his choice, not mine, not something I choose to do personally. But I think he does it a little bit to kind of just respond to the haters sometimes. It's you got to have a very intimate understanding of your system, right? So for me, if I struggle with a swing system but with a low win rate, right? Because I think psychologically it kind of puts you in a bit of a questionable position where you're saying like, oof, can I psychologically endure just winning one of every 3 or 4 trades, right? Even if the returns are there. So for me, swing trading is decent. Position trading is difficult, but scalping, day trading, those kind of things kind of speak to me a little bit more because it allows me to get in and out of positions quickly and not have to let them run too long. Right, so let's get rid of all of this and let's do it again. Right, here we go. So nice naked chart. Like we said before, let's start on the weekly, right? Let's take a look where we are, what's going on. What can we learn? So levels that would stand out to me straight away, I'd be looking at something like this, right? I know we're a long way away from this, right? But I'm just looking for where we've got obvious support and resistance flips, right? So we can see here, price came in, something significant stopped price here, right? Now, obviously we had this low as well, but that had been swept. And this one obviously has a lot more relevance because we can see here, resistance, breaks through. Support, breaks through, resistance, sells off down to liquidity at the lows. And then again, this would form another level of interest for me. Because we can see here, something's clearly capped the market. Support, big close below, retest. And now you see how it's sticking to this, yeah? Then we pop above, and ideally you'd want to see this kind of retested here, or certainly these lows hold, all right? Which we can see we're kind of flirting with at the moment. So that, for me, definitely brings a key point of interest. And then I'm kind of zooming in a little bit more to this and saying, okay, well, where's the recency? What are we looking for here? If I was asking myself the question back here, what was capping the market? Yeah, as in what kind of candle high are we looking at that's kind of holding this back? Then I'd say probably this one, right? Why that one? Because again, we can see here how it acted as resistance. We get this deviation, retest, big sell-off. Yeah, and then we come down here, deviate this level below here, come back in again, and now this is holding us as support, right? So where's the next liquidity? So if price holds this level, where's it likely to run to on a weekly basis? I'm looking at any stops that are resting above here, which I'm going to do in a smaller line to signify that this isn't a key level, it's liquidity. Or I can just do that as well. just to remind me, all right? Because then as we break down through the lower time frames. Sebster, so swing trades more likely to lose. That's been my experience. Yeah, very much system dependent, right? So someone like Burb, for example, will understand that his system is the idea is it's finding higher time frame shifts of structure, shifts in momentum, and then it's a very much a trend following system. So it means that when it's trending, it's very successful. When it's not trending, you're going to get these fake outs, and then you're going to get caught in those moves. So overall, the moves themselves that you do catch tend to be a lot larger, right? So you might have a 5, 10 plus R trade, yeah. So what that allows you to do is that allows you to lose 2, 3 trades in the build up to that when you lose 1R, and overall your system still remains very profitable. Unlike a kind of day trader, an intraday trader like myself, where my targets are a lot smaller. I'm trading for a couple of R typically, but I have higher fees to deal with. So therefore, I need a higher win rate on those trades. So what you're typically doing is mean reversion trades, or you're doing range-based trading where there's a great consistency of price moving within a range-bound environment until you get a confirmed breakout. All right. Travel troll, you might want to sit with BTC or ETH when trading. Yeah, I think that's sort of some good advice, especially when you're learning the charts. Taking that up to another notch, I would say that actually what you probably want to do as well is just find a handful of assets, just really focus on 2 or 3 actual assets, maybe like Bitcoin, like Travel Troll says, maybe Ethereum, and then like like a, depending on what your kind of vision is going to be, but like an FX or something like that, like a Forex pair. Mainly been on BTC. And you know what? Just really learn BTC intimately. Yeah. ETH will give you a good idea of how the strongest of the altcoins moves against BTC. Yeah. And I think studying those two will really, really give you a good handle on the market. Really look how price moves, how it respects levels as well. All right. And R, sorry, mate, I should have. So R is the abbreviation for return, right? So our R to R, our risk to reward, yeah, return or reward, which is meaning that when we're entering a trade, if we look at the screen for a moment, and obviously this is just an example, but let's say we entered here and our stop loss is going to go just a little bit below this swing low here, and we've got an upside target of here, yeah. Then what this allows us to do is we look at this target, we look here, we see we've got 3.79. That means that this is our risk, which we can define, yeah. And if this is our risk, let's say our risk is $100 on a trade, yeah, or $10. We don't want to lose more than $10. So this represents $10. If we lose this trade, we lose $10 plus fees, right? If we win this trade and we hold it all the way to the top, we earn 3.79 times that. Yeah, so we earn $37.90. All right. We still have to pay certain fees, but that's what you should look into. All right. So when we're planning a trade and we're looking for targets, and I'm saying, okay, well, actually, I know there's liquidity resting above this high here. So actually, I want to make this my first take profit level. And maybe I take 40% profit here and then move my stop loss to entry so that if price reverses on me, I don't lose any money. All right. I've booked in some gains here if price reaches, and then I've also reduced my risk. Okay. I think I've done some videos on it, or there's certainly some videos on that on the Burb Nest YouTube channel. So come and hit me up if you can't find those. If not, have a little look through the video section on that, and there's some brilliant things on risk management, which is really, really key actually, because I've known exceptionally good traders who have been massively outperformed by average traders that have got very, very good risk management and money management as well. All right. So just to move on here with Rune then. So I've kind of got what I want to get here. This fair value gap here, which is the gap between, it's a 3 candle pattern where 1, 2, 3, where you see an impulse move like this, and then you get a gap between this candle's wick and this candle's wick. See, they don't overlap. That's what we call a fair value gap or an inefficiency, right? And we expect that to be a draw on price, okay? So that's where we are on that scale. Let's drop ourselves down to a daily. Yeah, guys, remind me in a minute. Yeah, we'll certainly, let's do flow and waves then. Yeah, by the time I've got through them, I think that'll probably take us to the end of the stream. So do remind me, guys, if I forget. And Travel Troll, again, absolutely right. RM is key, meaning risk management. Absolutely key. So where are we on a daily scale? Now, what are we looking for here? So kind of bullish structure up to here. We come up here, set our low, lower high, break of this low. We're now kind of bearish, but we're technically at support here. We can see the price has come down. Engaged with this, price has now come back up. If this was a deviation, well, it was a deviation, but if it was this and then price was really looking to push up from here, I would kind of have expected it to make a run on these highs. So we've got like relative equal highs here where we expect there to be liquidity, right? So we're going to just draw them in as equal highs. Now, as our low, where's our resting liquidity? I'd be looking below here. Like obviously on a daily scale, we're going to get in there and then we're going to go up. Also, as well, what's really interesting with this, while we might have been expecting reversal here, and Nit has just reminded me of this just with his question, but did you see this? Oh, there's a big purple box at the moment. I normally do these in grey, right? But this is our fair value gap between this wick and this wick. What we're saying is we expect price to draw into this to rebalance. You see how it fills it and then it goes back. Well, if we're in a downtrend, yeah, so if we're bearish, we're looking at these fair value gaps for price to draw back into and then potentially break down. We start closing above these. Yeah, so if price at this juncture came above like this and then continued to move higher, we would consider that bullish, all right? But basically what we're using these as our fair value gaps is looking for price to rebalance. Now, the thing to say here is we can see in this fast move up, look at this move down. Yeah, fair value gap between here and here. Yeah, price came up, was drawn into this to rebalance it. Now, as it came in to rebalance it, it took away, then it built into structure and it had this impulse move higher. Now, this move here, as we can see, also has inefficiencies. Fair value gap here, this one here, and look what happened. This fair value gap here, price came down and filled it beautifully. Yeah, filled it, rebalanced, price then goes on its way, okay? But we just want to remember that we've still got these down here as well, and as well as this resting liquidity. So if we do lose this low, I'll be looking for this low here, which has got a nice bit of confluence with this, to be run. If price then gets back above this level, we can then consider maybe price is ready to move higher. If not, we would think that price will do something like this, take out these lows, maybe come around here a little bit, retest this, and then it's going to be looking for liquidity lower down, right? Because we've got these thin moves here normally get filled pretty quickly, and then we come into this key support level here, all right? Quick question here from Nit. Sometimes I draw a fair value gap, but the price goes the opposite direction. What could I be doing wrong? No, nothing wrong, mate. Same as this, right? We've got a fair value gap here, and price just didn't quite get to it. Now, the tricky thing about fair value gaps is they're not always like this one. They're not always filled immediately. We've got fair value gaps on the weekly charts and the higher time frame charts as well that are a long way away from being filled, right? And actually, when we look at the Bitcoin chart on a long time basis, one of the key things that gave me a target of around about 12.5K was looking at the key support down, looking at the inefficiencies, the fair value gaps that were left in the wake of that massive bull run. Because the market likes to rebalance them, but that's rebalancing them years later. Right, so let's have a very quick look at the 4 hour and say to ourselves, okay, if we're looking at this here, I'm looking here for just confluence of levels that we've got. Now, when we're looking at how price moves, or when I'm looking at how price moves, I'm looking at for it to go from liquidity to liquidity, right? So when a key high is run, yeah, we're then looking for price to give us confirmation of a breakdown on a lower time frame. And then we're trading it down to the liquidity that exists below, right? Which are naked lows, yeah, as well as order blocks, which we can see is what stopped price here. Yeah, price dipped into this bullish order block. Bearish candle, but bullish order block because it's the last down candle before an impulse move higher that also breaks market structure. That's always, for me, a good condition to be met for an order block, right? I'm not going to go into breakers in this one just to make it so it just doesn't get too convoluted, but I use breakers a lot as well. But that's what I'm looking for. I'm looking for these reactions because then when price gets back here, yeah, as it does here, then we expect if the buyers really stepped in here, well, there's an expectation they'll step in again here, right? Then when price gets back to this, and let me just show you this very quickly as well. You can definitely do a lot of research on order blocks. I just use the bodies, what I favor. but people use the wicks as well, and people have different parameters for them. But for me, I'm looking for the down close candle. Like, it has to be of a decent volume. If it's a bit skinny like this one and they're consecutive, then I'll include them both. But the last high volume down close candle before the break of structure, the market structure, shift in the opposite direction, and you want to typically see an impulsive move, right? Meaning a dynamic move, something that's a bit punchy, right? It's got impact, right? It's got aggression to it. Same as when we revisit it here, and then look what happens here. We melt straight through it, come back to it, flip it to resistance, and then we sell off. When we get this reaction in here, we're then just targeting liquidity lower because we're saying, well, look, it's just not possible. It's just not able to get above this, right? If it's finding resistance here and we come back down and then we break down and then we target liquidity down here. So anytime you see like this here, right, we get this large down candle, price then reverses back to the upside, right? And the reason I'm choosing this one is we've got a smaller candle here, right? But actually for me, the change happens here. This is the move down. This is the high, higher low, higher high. This is where we get the structure. This is the move that causes that. So then when we draw this across, when price revisits us here, and actually let me just turn this to an actual order block color, which is for me is dark blue. When price then comes into this here and we see reaction, price gets back above. And when I mean when we're searching for the reaction, we're finding these things on the higher time frames, right? But that's not the time frame that we're looking to execute on. We're using this as a point of confluence, right? So we've identified our order block. We're waiting for price to come into this and then show us, right? Show us that it's ready to move. And how do we look for that? See this V-shaped dig into here. That's price sharply moving in and sharply being kicked back out, right? And there's a number of different entry methods that you can use on these. I mean, this would have happened in the middle of the night for me, so I would have been looking to get involved in this move somewhere around here because this is going to be my open, right? Let me just pop these on, okay? So this for me is the New York session, right? I don't know if Kelly's still with us, bless him with it being so late on there, but this is where I'm looking for my New York session here, which is the afternoon, thankfully for me here in London. And I just want for it to meet my parameters. What I'm looking for is this. I want to see lows swept, right? Meaning that when we get these lows swept, it becomes of interest to me because we've had a sweep of the lows. We've got a bullish bias because we're in an uptrend here. We've reacted from a high time frame order block. We've got key objective targets above us that we see price running to. And then we're just saying to ourselves, right, we've got here, price breaks down. We want to then see a recovery. Yeah. So a recovery in structure. And then what we get here is we don't get a break above this high, right? But what we do get is we get another sweep of the lows here, right? See how this has come down, taken out lows, resting below there and there. There's Kelly, still with us. You absolute soldier. Well done, bud. And then for me, again, I'm not going to get into this too much here, but I am then looking for the breaker candle, which is the last up candle here. This is orange for me. So just so when you see my charts, you can understand, right? Wrong orange. Sorry, tweak my OCD otherwise. There we go. Right. This is the up candle that led to this purge lower. My assumption is that this purge lower is designed to generate liquidity to go higher. Why? Because it's taking out stops below these lows. So people think price is going up. People have jumped into the move here, here, and here. They get wiped out, generating more liquidity for buy orders, and then you get this move up. So what I'm looking for here is I want to see that sweep. I want to see that generation of liquidity, right? And I then want to see price move away, shifting structure, which we do here by closing above this high. When we get this close and price moves away, I activate my order on here, and then my stop loss just goes below the swing low, right? So then we can see with this example, I don't think we do quite get stopped out here. Sometimes you can. No, we would have been okay. But this is the long order. Price comes down, we get our retest here. Our stop loss goes under here. Where would I be targeting? I'd certainly have an internal target of here. because we're looking at, see these? This is all liquidity, all untapped liquidity. This is where price is going to run to try and find liquidity in the opposite direction. And then we can always say to ourselves, we put interim targets on the way up. We would obviously, we would obviously have extended targets higher than this as well, for which we would be looking left, to find the liquidity. But actually, as this stands, that would be the kind of key target. And what you would say to yourself is you would have certain points that you would then look to trim profit on the way up, right? And we can see, we quite get to it? Yeah, we do. We tag it here. And actually, you can see how important this liquidity cluster is here, because look what happens when we tag it here. Look how aggressive that sell-off is. Yeah. And where does it go? Below these lows, here, where we've got all this resting liquidity. Yeah. Now, when I say resting liquidity, what I mean is we've got stop losses of people. Yeah. So think, if you were going, and where's my highlighter pen? Here we go. If you were going long here, your stop is going below the price swing low. Yeah. Swing low, swing low, swing low. As you're going up, you're building up all of this. This move down here is to take out liquidity here and liquidity here, right? Boom, it's gobbled them up. But this, in fairness, took out that liquidity, right? So ignore that one. But if we're looking at these, naked, 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 all the way down to here. So then when we zoom back and we say, okay, when price has found on the upside, all this liquidity, all of this untapped liquidity, which it runs into here, then you get the sell-off. Where's it hunting to turn? Liquidity resting below here, 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 here. And see how it does it? Interacts with this. Actually, let me just do that in a... so interaction here, price continues to sell off. Sweeps that, sells off, right? Sweeps that. See how when we're getting into these levels, there's some kind of reaction, because this is where liquidity sits. This is where the stop losses are, all right? So that's just how I'm viewing the markets. I'm saying to myself, okay, how do I take something from a higher time frame down to a lower time frame, and then let's look to execute it. Craig, I believe it was. I hope that's answered your question, mate. I know it got a bit convoluted, but I just wanted to kind of build out on the ideas of the fair value gaps, and then how we can kind of take these order blocks and put them onto a lower time frame. So for anybody that's got a little bit more time about them, I did say that I would take a look at flow as well, and then I believe Amit asked for something as well. So just quickly on this one. So do I think price could get down to 1.66 ish? So let's look here. Yeah, I mean, we've got this key swing low here, right? Which is what I think you're probably looking at 1.65. What's this? So the low 1.657, so pretty much 1.66. Yeah, absolutely. In fact, if I was bullish, what I'd be looking for is this. Right? I'll tell you exactly what I'd be looking for. Sorry, let me just put that on the right low, which is there and here, right? I would be looking for exactly this, mate. If I was wanting to get bullish here, I'd be thinking, right, order block here, low here. If we want to turn here, if we don't hold this low, we can see the reaction here. I think I'm always trying to think what would be a really sneaky move for price. I think price running this low into the equilibrium of this order block, right? And then regaining structure here. If we did something like that, is when I'd be looking to long. If we came down here to this area, right, and then we broke that, and then we did something like this, held here, got this sweep up, then I'd be looking at a hold there for price to take liquidity from the highs, this high, and then give us confirmation, and then drop back down into this key level, also paying attention to these lows here. All right? As in profit, why not? Awesome. Yeah, I think it sounds like you got a good handle on this one, mate. That's certainly what I'd be looking at as well, for sure. Let me just see if I've missed anything. Sebster, so heard the term smart money. So that's an ICT concept. One of the people I learned off in the early days, his original mentorship. Fantastic guy, unbelievable amount of material, a lot of complex material in there as well. So good to kind of take it stage at a time, but unbelievable resource. I'd recommend anybody really kind of study his stuff. I've experienced so many sneaky moves, LOL. Yeah, I'm going to put that one on the screen, actually. And there will be lots more as well, right? But the good thing is you've got the right head on you. You've got okay, step it back, learn, adapt the learning, and then we're always learning in this market. But you sound like you've got a good head on your shoulders, mate. Keep learning, and I'm sure you'll go far. But smart money concepts is an ICT terminology. I use it sometimes as well. It just, for me, it means where the big money players are sitting, the people that can move markets, and where they're hunting your stop losses and stuff like that. All right, so that's the key point. They want to generate. Think about it like this: they've got millions and billions in orders. If they want to buy somewhere that other people are buying, they're not going to get those orders filled, or if they do, they're going to get then they're going to get a lot of slippage, meaning that they're going to get them not filled at the levels that they want to have them filled. So hopefully that answers you there, Craig. Sound like you've got a good handle on that one, mate. Let's take a look at Flow. Let's see if I've ever taken a look at Flow before. Might be my first time on Flow. It is. Awesome. Right, let's do a really super quick. Try and do this in 3 minutes. All right, so you've all got the concepts, yeah? So let's now build them up. And let's just throw them straight on the chart, right? And we'll do this pretty quick. So just going to get rid of my sessions index, so that's out of the way. Here we are, right? So same principles for me. Where's the key levels I'm looking for here on the weekly? That's definitely interesting. It's not the cleanest in the world, but it definitely deserves to be on there. I'm saying it's not the cleanest because we didn't get that retest to it there, but we did sell off. We've come back into it, deviation, sell off, retest, and then a big sell off down to the lows. What's capping the lows of the market here is quite tricky. Is it this level? Not the cleanest. Bodies of the candle here I quite like. Now, the reason I've taken the bodies here is because there's a reason that they've stopped level, yeah? The wicks have gone below, but we've not had closes. And then look how we find support here, sell off below. Is this the retest before price goes lower? That's what we're asking ourselves the question of, right? So, Sebster, DM me, yeah, no problem, mate. Absolutely. Pop me a message. It's been great to meet you. Thanks for joining the stream, mate. And yeah, we'll hopefully catch you in London. All the best. So, where are we here? Now, on a daily scale, let's put our EQ in. Here we go. Okay, so that's where we sit with our EQ. That's been nicely respected, hasn't it? When you add the EQ to when you've got two key levels, it often gives you a really nice bit of confidence. You can see when it's getting respected a lot, like it is here, basically all the way through. That gives us a lot of confidence then that it's, that the levels that you've got are really, really accurate as a range. Now, this is a really tricky point here, Flo, because this could just be a deviation above here. And then we could be looking to come. There's a lot of liquidity below here, right? So we can see this, all of these lows. I'm just going to draw this up as liquidity so that we're aware. So that looks like a really key target for price here. In terms of where the target is above, we're looking at the EQ here or this higher. So price needs to do quite a lot to really have a run here, okay? So on a daily scale, is there anything else we should be looking at? I mean, I think what concerns me here as well is in looking at this to the downside is we've got these equal highs, right? Now, these have been run. And like we said, if this is engineered liquidity, then we're in a situation right now where price has run equal highs, it's had a rejection off of our key level, and is now starting to break down. So if we then take this down to our 4 hour, the other thing that I use so often in these situations is the B Pro for divergences, right? Just to make me aware of when we're getting this momentum shift in trends. You can see you get them along here, they catch the corrective moves, and then ultimately they catch the reversals as well. But we're kind of playing out this bearish divergence here. So what would I do to look to trade this? So we can see that we've got the sell-off in price down here. This, for me, isn't the point to get into this. I'd be looking at a couple of things for entry here. I'd be taking a Fibonacci. And obviously, if this is the bottom of the drop, if this continues to drop further, then we need to adjust our fib. Right? And the key thing here I'm looking for is the equilibrium, the 0.5, or the golden pocket, the 0.66 and the 618. Price is pulling back to here and start showing weakness around here, then we can look for it to sell off. The other thing I would look for here as well is saying, well, on this liquidity sweep higher, this was the down candle that led to that sweep. Yeah, so on a higher time frame, I'd be looking at this, as I said, as a breaker. And we can see, as price came down here, we can see how it was jabbing into this and finding this as resistance. So I'd be looking for price to pull back into this. If it started breaking down on the lower time frames, then this would be my initial target here. And then ultimately all the way down to the liquidity that's resting under there. All right. So I hope that's covered it on flow, guys, as well. And then let me just have a look. I did say I'd do one more, didn't I? Where was that? Sorry, guys, just looking back through the comments. So many of you on the stream today, guys and girls. Thank you so much. By the way, when I say guys, I get this quite a lot. I really don't just mean that's fellas, as in blokes. For me, it's kind of refers to ladies and gents. But yeah, ladies and gents, really big shout out to everybody, especially the goodness knows how many of you that are still here after listening to me waffle on for this amount of time. So for those of you that don't know, we try and make this one a little bit of a longer stream on a Wednesday so we can take some requests, but we try and cap it around an hour. But I did promise Anik, if he's still around, that we would look at flow. Oh, it was Anik. You were the one for flow, weren't you, mate? So actually, I think Wave. Sorry, it was Apar. Apar, if you're still on here, buddy, I will take a look at that. Or Anchor, or Matic. Oh, we've got some on there. Right, you've got like 30 seconds to cast a vote, guys. We've got Anchor, Matic, or shit, I've forgotten the other one already. That's terrible, isn't it? Short-term memories. Or ADA as well. And Waves. Right, what are we going for? The next one to get the next vote is going to get the win. Let's see if anyone's still here. Maybe the viewer count's gone down to 0, but the counter's still showing people in. Tiago Alves, thank you very much, mate. Oh, and Fermi's in with the win for Anchor. Okay, let's close up on Anchor, guys. Let's take a look at that. Thanks, I was late today. Yakuza Kana. Hey, buddy. Working hard, hopefully. Right, so Anchor. Yeah, here we go. ANKR. Let's have a look. Right, okay. So quick top down on this one as well. So we're just going to hide everything if we've got any levels on it so that we don't get any bias on this. Although looking at that, came quite nicely. This is the idea of order blocks and that, guys, as well. If you keep them on the chart, you very often find that as they're acting as resistance, when you flip them, they give you a really good idea of where the support is as well. So let's just hide these. Nice fresh chart. Onto the weekly. Craig Parker still here. Nick Parr still here. Legends. Look, old school soldiers. Right, so this is nice actually because this looks a little bit different, this one. So weekly. Looking at something like this. What was capping the market was that, in my opinion. Resistance, 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 flipped, sold off, got back above it, retested, it's now sold up. That's a nice strong level. So let's get our fib on there as well. There we go. Right, so here we go. So here we are, range. This is our main kind of weekly range. See the deviation here, price comes back within. We're now at the range high. Again, caution to be shown really until we clear out above this, in my opinion. Do you know what? Actually, this one, Anchor, can just really kind of be broken into this. What worries me a little bit here is this really fast move up. Now, let's look historically what happened here when we had a similar situation. We had a much smaller deviation, but price came back within. We had this huge expensive move to the upside, right? These can often be retraced, these type of moves, because they're a bit inefficient. So as we pump up, hit the highs, see we don't get any significant closes, come back in, we retest midline, lose the midline, retest the midline down to the range low. We then come out of the range low here. Yeah, price breaks down. As soon as it steps back in the range, our assumption is then that it's searching for higher prices. We get our retest, price breaks out straight through the midline here. So the worry is, and what I'd be looking at is, do we get a similar situation that we did here? deviation, price gets back inside, in which case we've got a beautiful clean target down below here. With thin price action like this, it doesn't often give us really much to work with, but I think what I'd be looking at is if we got any confluence historically here. So when we came up here, when price ran this high, there was significance here because this is the low that I'm interested in. And why this low? Because when price ran this high, see price came up, swing failed this high, so ran the liquidity above it, and then broke down. This is the low that led to the sweep of the high. Price is now closed below this. We treat this as a possible area of rejection, okay? So let me just drag this line across and let's see what it can teach us. So we see how price is holding quite nicely here, right? So for me, the clear and clean play that exists here is seeing one of these two scenarios, right? We see price spike up, taking out the liquidity above here, right? In which case we want to then see it on a lower time frame, hold this level, get back into a bullish structure, and then we'd look for entries around here, okay? Now, if we don't get that, then we've got a nice clear downside target with our SR level here. Price comes down, similar, we'd look for a breakdown here, a retrace into this level, and then we'd want to be looking on the lower time frames for price to be respecting this level, to break structure, and then we've got beautifully clear targets down here, all right? So once again, we would look to do that on a lower time frame, right? Like a 15-minute, 5-minute, and then price is looking to sell off, all right? So for anybody that was interested in that, then that's how I'd be looking at that on Anchor. That's quite nice and clean at the moment. So I'd be looking for a key break above this level. For anyone interested in those levels, that's 0.05100, and then this level here to get a clean breakdown below is 0.04645. And Yakuza, no, we haven't, mate. Unfortunately, we're just finishing up the stream now, but because you were late to it, and I really, really appreciate you taking the time to pop back on, let's just take a very quick look at Sol as well, right? And again, we're just going to do this super quick top down. Just have a look at what we've got. Sol's got a nice red tick on it, meaning that has been getting pretty aggressively shorted by us at the moment. But let's just make sure we've got everything clean. A lot of data sat here, so let's get that. Hide that. And then hide that as well. There we go. Right, so let's rock and roll with this. On to the weekly. Fermi, you're very welcome, mate. Anytime. I hope it's helpful. Like I say, I'm definitely not encouraging anyone to kind of follow what I do. I just hope that kind of the way that I look at the markets and the charts and stuff like that either kind of helps other people understand the way that I look at it, or maybe brings a little bit of confluence to their own thoughts. So again, here, right? Make that 2. Let's make that our key color, which is our nice purple. Yeah. Here we go. Peace, Sniper. Hey, bud. Good to see you. Nicely chilled in the background, just soaking it in. Thank you, mate. That's very kind of you. So for me, I'd say that this is our key kind of pivot point here, right? Now, I know the only thing I'm not a massive fan about here is just that this was not kind of retested here. This is obviously finding resistance somewhere else. So we're going to look at that a little bit more, somewhere else. So we're going to look at that more on the daily. What we can see at the moment, though, is that this is a key level and this is currently rejecting price. All right, so let's see if the daily can tell us a little bit more, especially back here. To what was kind of capping price. Maybe kind of this low here, or maybe this kind of order block. Actually looking at it, right, we've got our down candle here before price moves up. We get the retest of it here. So just to draw this in for you guys so you understand what I'm waffling on about? Yeah, this down candle here. I'm going to draw the whole thing in. I would only make an allowance for the body personally, but just to show you this, right? This is so significant. This down move before price broke structure, right? Why is it significant? Because we can see here, price had this down move, came up, retested this, came above it, dipped into it again, broke structure. It's then only ever found a bullish reaction here, up, bullish, up. Now, I know it doesn't look like much, guys, in terms of talking a bullish reaction here, but a daily chart, you'll be amazed. That's 25% that move, right? So that's a huge move, right? Up, up. Then we start to show a bit of weakness here, right? And this is where you can start reading charts. Now, dipping into here, holding below the EQ, the 50% of this order block is key for me. Because then when price gets back above it, I'd be looking to trade that up, yeah? But I'd still be a little bit thinking in my mind, are we going to rip through this? Because price is finding itself a bit comfortable in here. You normally want to see these sharp reactions, right? But we trade the charts, we break out of it, we retest it, we're long. We retest it again, we're definitely long, but only into these highs with an extended target here, which we can see we tap here, yeah? Now, do we actually maybe... No, not quite. But we've kind of taken out these highs and come into what would be a lower time frame order block in here, right? So when we then carve through this, see how this goes from providing tons of support here to just nothing. When you flick through that, then you expect this to become resistance, right? So resistance in here, we can trade that, and we're here once again, right? So really quickly, how would we look to do that? That would be the really key area of interest for me. I'm asking myself now, if price is breaking down here, where's it reaching for? Yeah, where's it reaching for? There's liquidity resting under here. Which for me is key. And then there's like these equal lows here, which would be an extended target down to the downside. Would I expect anything to kind of change price here? Probably not, because I'd be looking for the breaker, which would be this, okay, like this up candle, right, before price sells off lower. I think what I'd be looking for here, I think what I would be looking for here is on a lower time frame for price to lose this, retest it, show me it's got a willingness to go lower, and then I'm testing this liquidity here. So as we can see here at the moment, price is trying to get above here, right? Now it's left these equal highs here, so we might see price drop. If we start closing below this level, yeah, we've got to be aware that we've got liquidity here. So we could see something like this, right? We've got relative equal highs sat here. We could see price either dip into this level first, wipe people out here, then when it gets back below this, that's when we've got our high probability set up to the lows, okay, because it's wiped out both sides. Or price could, from here, sweep up to here, come back below here, retest, and then sell off, in which case we'd be looking to be sellers in here. Or price could just drop from here. If it did that, I would want to see this kind of hold a little bit. I'd probably drop into an even lower time frame, yeah, to look for something like this, whereby price gets acceptance below this level, because I want it to show me that it isn't just taking the liquidity down here before it decides to moon, yeah, because this is the other move we're looking for here. Maybe not that, maybe not that aggressive to the upside, but if price dipped down here, managed to break above here and hold this, yeah, then we'd be looking for something like this, right? And then we've got nice clean targets, liquidity there, and ultimately our target above. Okay. Sorry, let me just catch up on a few of these questions. Since the punch, I suppose, sold, Casper. Thanks, BC. Awesome. Yeah, welcome, guys. Thank you for the comments. Love the analysis. Love you guys joining in. Always asking really good questions, and I love that. Why would it not bounce up? Yeah, oh God, absolutely could do. And literally, as soon as you said that, didn't you? I just answered that. It was a really, really good question, though. If I hadn't answered that, why wouldn't it bounce up? Because it absolutely could do, right? But for me now, I'm just saying, okay, if we run this, but then get back down here, I think this is showing weakness and this has taken the liquidity. But if we do come up here and we show strength, right, we do this, then again, we're looking for price to kind of establish itself here before moving higher. Or if we have that big initial impulse move up, right, then we can say to ourselves, okay, well, was there a sweep lower? There wasn't a sweep lower here, but there was here, right? So let me just clear that up. Something we can do with our breakers is we say, okay, well, if this was the purge on liquidity at the low, where's the up candle that led to that purge lower? And that's this, okay? So we've basically got a breaker within a breaker. So now we could say, okay, on a lower time frame, where if price comes back above this, we get our impulse move higher, shift in market structure, price then retraces to our breaker, then we're buyers, right? We could have an interim target of here, obviously stops below this low. And then we would just simply be trading this to our upside targets, and again, ending with this one up here. All right, guys. Look, we're going to call it a day there. Hour and 15 minute in. I really do struggle to keep these to an hour, don't I? But hopefully that's covered off a few charts for you guys. And just one thing I hope that I kind of try and convey, I hope that I don't make things too convoluted. I hope we just kind of look at it and we say, okay, where's our key high time frame levels? What's capping the market? Where's our key SR? Then we're driving that onto a daily and we're looking for the support bias of that, all right? And then from there, we're literally just moving along and saying to ourselves, okay, how do we use this? Where does it make sense? And how is price moving through our levels? Remember, when we see these moves, we want to see these kind of impulse moves like we've got here, right? So you notice you get the breakdown here, and you break down. That impulse move there tells you so much because it leaves this fair value gap. You can trade off of that, right? Or in this instance, you can then look for the down candle here, right? And let me just clear that all up. You got the fair value gap here, right? And then you've got this down candle, yeah, that led to the move higher. We just simply want to mark that out. And then this is where we can look to get our entries. All right. So I hope that's been good, guys. Look, wishing you all a fantastic week ahead. Obviously, I'm going to be back in on Monday. Billy Joe. Yeah, Billy Joe TV. I do use divergences a lot. I use our B Pro for that. If it's something you're interested in knowing more about, come and just drop me a message at the Nest, mate, or ping me on Twitter or something. I'll give you a link through so you can learn more about it. Kelly, you've enjoyed watching, and what a soldier as well. Kelly, everyone, it's about, I don't know, 2 a.m, something like that, maybe 20 past 2. Which is just awesome. Travel Troll, I'm really sorry. I saw you ping a request up there earlier we didn't get to. Come back next week if you're around, and I will definitely make sure we prioritise that for you. Nitpar, Craig, awesome. Thanks so much, guys. Really appreciate your feedback. Fermi, Peace Sniper, Yakuza, Maros, Travel Troll, obviously, as well. Billy Joel TV, Tiago, Sebster. Really awesome to have him on the stream for the first time today, along with you as well, Kelly. Thank you so much for coming on. CS Lychee, legend. Sorry, didn't get around to ADA. Again, mate, do just come and give me a shout. We can cover that off as well. Apar, Vikos as well, who was on here. Anik as well from earlier. Beat as well. Thank you. Do appreciate your thing. I know you're not a big fan of TA, mate, but do appreciate you popping on the stream, and everybody's entitled to their opinion. C-Ron. Glad I saw about that far. Kristen as well. Guys, we had so many people on the stream today. It was absolutely awesome. And really, really do appreciate every one of you. Tino as well, and Burned as well from the beginning. Thank you so much. I hope it's been helpful. Do reach out to us if you're interested in trading with us, getting our calls for free. You can do that on the Bybit link that's in the description. You can also get yourself a free trial for the Nest. Come along and work with the professional trading team we've got there and see if it's a community that you're interested in. Don't force yourself to be part of something, but if you've got an opportunity to try it, I say give it a go. If it's for you, amazing. You could find something that can really change your life. If it's not, keep searching. But just try and find people that a lot of other top people respect. Don't discount people, not because of that, but there's a lot of accounts, there's a lot of noise out there. Find the trader you want to be, and then find people that really teach that, and then get involved with them as well. Guys, appreciate all of you. Thank you so much. 2:20 a.m. there for Kelly. What a ledge. All right, guys, thanks so much for this. I look forward to seeing you all next week. Have a fantastic week. Trade safe. Remember FOMC today as well, so do be cautious. All right, have a great week, guys. I'll see you soon.